Yeah, so thank you for that introduction. That pretty well sums it up. And so I sit in a very unique place inside this industry in that I'm an investor. So over the course of the 6 years that we have been making investments out of Space Fund, we've been pitched over 1,000 times. So we've seen 1,000 different business plans in this industry, which is a very unique perspective. Also on the ground with my board of directors roles. And kind of the biggest pain point that we see time and time again is that there's just not enough money for these companies to do what they need to do at the speed they need to do it. The biggest bottleneck in this industry, time and time again, it comes down to money. And at Space Fund, we're limited by the amount of money that we have raised from investors and how much we can invest in these companies. We would love to give them all the money they need. We just don't have the money to give them, right? So trying to back this out and why there isn't more capital being invested in the space industry was the genesis of this research project. So, as most of you will know, especially the McKinsey folks in the back, I'm going to cite you a couple of times in my paper, the space industry has this tremendous growth possibility, right? It doesn't matter which predictions you use, whether it's ULA, UBS, Morgan Stanley, Bank of America, everybody says this industry is about to be huge. It's about to be massive. And if you look at the number of objects being launched into space, it has this beautiful exponential curve that every investor wants to see. So why isn't there more money? Now, some people would say, yeah, this industry is obviously very investable. Look at these numbers. Look at these amazing numbers. All of this money being invested in space. Well, not really. Space X-rays, space X-rays, space X-rays, space X-rays, okay? So most quarters that we're tracking investment in the space industry are actually really, really small deal size numbers. And so you take the most recent quarter here is Q1 2023 that was listed in this chart, 311 million. Okay, we measure the space industry in billions. We're predicting it to go to trillions, but the investment dollars are being measured in millions. That's a problem, okay? So if we compare this to all the Q1 deals in venture capital in general, 44 billion was deployed in Q1 of 2023. 44 billion was deployed. Again, we're measuring space industry investment in millions. AI, 20 billion. Bay Area companies, 15 billion. Female founders, yay, 7 billion. MedTech, 1.7 billion. Information security, 1.6 billion. Ag tech almost hit $1 billion. Space was only 311 million. It's not even on the billion scale. Only less than 1% of VC funding is going to the space industry. That's the problem we're trying to solve. So, how do we solve the problem? Well, we need to start at the top. We need to talk about how capital is actually allocated into venture capital. So, companies down here, the startups, get their money from VCs, who get their money from asset allocators. Now, who are these asset allocators? These are the big players in the financial industry, your retirement funds, your fund of funds, family offices, your big wealth managers. That's where money goes into venture capital. So in order to understand why there's not enough money here and there's not enough money here, we have to go up here and figure out why this money isn't flowing into the space ecosystem. So how do these people think? How do these asset allocators distribute their funds? Well, they always have a combination of stocks and bonds. That's where you start. You have stocks and you have bonds. And then you have these alternative assets that are meant to help balance the portfolio. And this is where the real number crunching starts to begin, is how do we divide our assets between these different asset types and classes? And so there's two goals here of the asset allocator. They want to hedge against a crash. So you think about COVID-19, you think about the subprime mortgage crisis. You want to make sure that you're protected against these black swan market changing events. But then you also need to diversify. You need to make sure that if one of your assets goes down, you have a corresponding asset that's going to go up, right? So that you're constantly maintaining at least a little bit of positive growth in your portfolio. So correlation is kind of the all-important measure that these asset allocators use to determine how to balance their portfolio. So an asset that has perfect correlation to another asset is going to move perfectly in lockstep with that asset. That's a 1.0 correlation, or a perfect positive correlation. Assets that have no correlation are going to give you this chart like this. They don't correlate at all. When one moves, it doesn't affect the other, and vice versa. And then perfect negative correlation, obviously, is that kind of opposite effect. When one asset goes up, the other asset goes down. And so I know this is a bit of an eye chart, might be hard to see in the back, but this is published by Guggenheim Investments. And this is a correlation chart that is well known, understood, and a part of every asset allocator's playbook. And you can see how these different alternative assets, everything from managed futures to long-short equities to hedge funds to equity markets, and how they all compare to each other in these different correlations. You'll notice the green numbers are these high correlations. This is above 50%. Is a fairly good correlation. These red numbers are a negative correlation, right, where you get that kind of opposite effect. But this is the sort of data that fund managers use on a daily basis. What's missing from this chart? Space, okay? Space isn't yet considered an investable asset. Guggenheim does not publish space compared to all of these other different investment opportunities. So that was our goal here, was to show how space fits into that overall portfolio assessment. So we started with 3 data sets, the global space economy, the commercial space economy as a subset of the global space economy, and the number of objects launched into space. We decided not to use the 3rd data set, the number of objects launched into space, because it's not normally distributed, which makes it more difficult to compare in a correlation analysis. And then we compared the space industry to both stock market indices, the S&P 1200, and then the MSCI, which is a global stock index. And we also compared it to alternative asset classes, because this is really where space fits into an investment portfolio, is in this kind of alternatives market. So we compared it to 2 different oil indices, the real estate investment trust, REIT index, hedge fund index, price of Bitcoin, and the gold return on investment index. And we produced our own chart. It's not quite as pretty as Guggenheim's, so I haven't color coded it yet. But the idea here is that the only industry tested, or the only indices tested that had any sort of correlation at all was the global stock index. And we're only at a negative 0.51 and negative 0.59, meaning when the stock market goes down, the space industry goes up. But this is still a very mild correlation. In order to see a significant correlation, we need to be in the 0.6, 0.7 range. So, and when you look further down this chart, you look about gold, it's not correlated to gold at all. This is almost 0, right? So as an asset allocator, looking at these correlation numbers, you realize that you need to find a way to get space into your portfolio, because this is a way to both hedge and diversify. And one of the most interesting things that we found in this study was that, oh, and this came out a little wonky on the slide, the space industry had 0 years of negative growth, okay? We were measuring year-over-year growth in the industry. Of all of the industries tested, the space industry was the only one that didn't have a single year of negative growth between 2005 and 2022. This black line stays above the market. And if you look at subprime mortgage crisis and what happened to the MSCI index, You look at the COVID-19 shutdown and what happened to public market stocks, the space industry is continuing to grow. And then you compare this to alternative asset classes, and you see this wild volatility on your REIT index, your crude oil prices, all of it has this wild volatility, especially during subprime and COVID. But that space industry line stays above zero, meaning it had positive growth every year that we tested. And this one I think is really fun, just as an aside. The volatility in the Bitcoin market is so huge that the space industry line doesn't even show up on the chart because Bitcoin is so extremely volatile, but still no correlation. And so what came out of this study was as many questions as we had answers. And so I'd like to propose to this room, if anybody wants to do some research with us and help us further some of this along, there's a lot of questions that fell out of this research. One, what are the market drivers that cause the space industry's weak correlation to other assets? Now, we believe this is probably due to the insulated nature of the industry because of the strong government support and the amount of government dollars, but this needs data to support that theory. And so what are the market drivers that cause the space industry's consistent growth? We believe reduced launch costs, decreasing size of technology, lead to more objects being launched into space. We also believe objects being launched into space is an indicator of the future value creation of the market. Sometimes it takes 3 to 5 years to actually produce revenue from an asset being launched into space. But again, this is something that needs to be determined. Is this consistent growth sustainable, right? Can the industry continue to grow at its current rates? Now, what portion of the increase in the number of objects launched into space and the decreased cost of launch are directly related to SpaceX and Starlink? My theory is a lot. And so it might be really interesting to do some of this data analysis with the removal of the outlier of Starlink. And then what are will the moderately positive correlation between the commercial space industry and Bitcoin continue? My thought process is probably, because these are two of the most high growth investment opportunities that we're seeing in the world right now, even with that extreme volatility in the price of Bitcoin. And will the moderately negative correlation between both space indices and the S&P Global Index continue? If that's the case, this makes space an amazing hedging and diversification option for portfolio managers. Why do the price of gold and the price of oil have the weakest correlations? I think this may be a factor of volatility. Both oil and gold have a lot of volatility based on market conditions and global economic policies, whereas space has more stability. But again, that's an area of research. How does space perform within different asset classes? So public market stocks versus private company stocks versus real estate investing in spaceports. Space can touch a bunch of different asset classes. And so understanding how those different asset classes fit within a portfolio, even if you are investing in space, I think is an important area of research. And then can the high cost and long timelines of space be congruent with the quarterly reporting requirements of public markets? This is something that I think it needs to have a lot more research done, because a lot of these asset allocators focus on public market stocks, and the quarterly reporting requirements of those public markets make space companies look like they're not making progress. And so this may be one of the drivers that has led these asset allocators to stay away from space stocks. So with that being said, this is why you should invest in Space Fund if there's any asset allocators in the room. Thank you very much.